The price of gold just hit an all-time high, and investors everywhere are wondering if this rally will continue or if they should rotate into other assets like silver. But could this momentum also find its way into Bitcoin? Today, we'll tell you what's causing gold to pump, how high it could go, and how this could affect the crypto market. But before we go any further, you need to know that I am not a financial advisor and nothing in this video should be taken as financial or investment advice. This video is purely for educational and entertainment purposes only. Okay, with that out of the way, let's dig in. Now, to understand why crypto could benefit from gold's record price action, it's important to first understand the relationship between precious metals like gold and silver and cryptocurrency. Like Bitcoin, people invest in gold for reasons that go far beyond number go up, though speculation does play a part. The main reason that people are perhaps most familiar with is that gold can be used as a store of value. That's because people will buy gold to protect their wealth against a weakening fiat currency like the US dollar. The value of the dollar can fall for a number of reasons that are outside the scope of this video, but the biggest cause of devaluation is inflation via so-called money printing. As you'll probably know, the more US dollars that get printed, that is, issued as debt, the more the currency's value declines. However, you can't just go ahead and print gold. It has a finite amount that needs to be mined, so its value isn't so easily inflated away. And this relates to another reason why people buy gold, and that's the supply and demand aspects. Gold has a very limited supply. Gold mining slowed significantly in the early 2000s, and most of gold's supply today comes from sales of gold bullion bars from central banks. However, the demand for a store of value is ever growing. People see this supply and demand dynamic as a great investment case for buying gold, which is considered by many to be money, rather than a currency like the US dollar. Another reason why people buy gold is that it's seen as a safe haven asset, particularly during times of economic crisis. For example, gold has been used to preserve wealth during major global events, such as the Great Depression in the 1930s, the 2008 financial crisis, and even the recent pandemic. That's because events like these create a lot of financial uncertainty and lead to a struggling economy. But of course, it's not just economic uncertainty that causes people to buy gold. Uncertainty at a geopolitical level can have the same impact. That's because these tensions give an unclear picture of what may lie ahead. Generally speaking, the lower their confidence in a government, the more people will resort to buying gold. In fact, this is why gold is often referred to as the crisis commodity. Gold is also an integral part of the culture of many countries. Not only is gold used as a store of value, but it's also used for other things as well. Places like India, which is the second largest consumer of gold in the world, use it as an integral part of religious ceremonies and festivals, where it's used to make jewelry and is often given as gifts. Meanwhile, places like China, which is the world's largest consumer of gold, use it as a traditional method of saving. And of course, people will buy gold as a way to diversify their portfolio, mainly because gold has historically been negatively correlated with the stock market. This is because, as the stock market declines, investors will flock to gold as a hedge against volatility. However, many investors will rotate back into the stock market when it begins to climb again in order to capture that growth. It's also worth noting that the gold ETFs in the United States are some of the most traded ETFs in the world, with billions of dollars of inflows between them. Now, as you might have already gathered, almost everything we've just covered also applies to Bitcoin. This similarity is why the prices of gold and BTC are mostly correlated, albeit that BTC is obviously more volatile and more speculative. People invest in BTC because it offers an alternative to the failing fiat currency system and serves as a hedge against inflation and economic uncertainty. The extra benefits of Bitcoin are that it has a supply that's hard capped to 21 million BTC, and it's much more convenient. It can be sent to anyone with an internet connection almost instantly. It doesn't need to be locked away in a massive vault somewhere, and you don't need a wheelbarrow or forklift truck to cart it around. It's the perfectly portable digital alternative, and this is why Bitcoin is often referred to as digital gold. And you can learn more about the relationship between Bitcoin and gold and which comes out on top by checking out our recent video on that very topic in the description. And by the way, if you're digging this golden content, smash that like button to give it a boost, subscribe for more treasure, and ping that notification bell so you don't miss a single nugget of new info.
The Coin Bureau Deals page. It won't make you stronger, but it will make you better at crypto.
So then, now that we understand the reasons why people buy gold, this begs the question of why gold has been pumping. As you may already know, gold's price has been going parabolic since Q4 of 2023. In fact, if you zoom all the way out, you quickly see just how vertical gold's price has been moving, and it's showing no signs of slowing down. Gold rallied by an impressive 35% from the start of the year to its most recent all-time high at the end of October, from around $2,060 per troy ounce to almost $2,800 per troy ounce. This skyrocketing price action comes after trading relatively sideways for roughly 4 years. However, recently, things started heating up. Gold has been putting in consistent new highs since November of last year. At the time of shooting, gold's most recent all-time high was just under $2,800 per troy ounce, and it could even be higher by the time you watch this video. However, looking at gold's chart would suggest that this rally could run out of steam very soon, but more on that later. Meanwhile, in the world of crypto, Bitcoin hasn't quite shared the same momentum since the start of the year. Although BTC recently hit an all-time high of just under $90,000 thanks to the result of the US election, its price action had been moving relatively sideways for almost 9 months since its previous all-time high of around $73,000 back in March. Ironically, the reason for this is the main thing that separates BTC from gold, and that's uncertainty. Whereas gold's price thrives off uncertainty, BTC, and the rest of the crypto market for that matter, hates it. Now that the election outcome has created certainty for crypto, it's given the green light for Bitcoin and pretty much everything else to rally. But back to the big question, what's causing gold to rally so much? Well, as it happens, there are multiple factors contributing to gold's recent price action, but it largely boils down to investors hedging against economic uncertainty, particularly as geopolitical tensions continue to rise. Major ongoing conflicts, such as the war in Ukraine and the conflict in the Middle East, create economic turmoil that quickly results in the devaluation of local currencies. There's also the growing tensions between the US and China. Now, this is more significant than you might think. The US and China are the world's 2 largest economies, after all. The thing is, this tension could actually escalate now that Donald Trump has been re-elected as president. Let's just say that Trump isn't exactly China's biggest fan. What all of this means is that investors will be turning to gold in order to protect themselves financially from whatever uncertainties may lie ahead, which in turn obviously pushes up gold's price. Of course, there are other reasons for gold's outperformance too. The recent pivot by the Federal Reserve to start cutting interest rates has made it less expensive to borrow money, some of which will find its way into gold. However, even a cumulative 75 basis point cut to interest rates so far doesn't solve the US's debt problem, which is only getting worse. As a result, the US will keep on printing more USD, which, as we mentioned earlier, will reduce its purchasing power. As the purchasing power of the dollar falls, the price of everything in fiat terms goes up, including gold. But again, this devaluation also means that there are more people moving their funds into gold, which also pushes its prices up. Institutional investors are also playing a big role in gold's rally because the gold ETFs we mentioned earlier have enjoyed high levels of inflows for months. And not only that, but central bank demand for gold has remained strong for years, to the point that there were record increases in the amounts of gold that central banks were buying earlier in the year. And of course, who could forget good old-fashioned FOMO? The speculation and hype around gold's price momentum would have attracted retail investors from all over the world, all hoping to ride the wave, so to speak. So then, how long can gold's momentum last for? Well, unfortunately, Nobody here has a crystal ball, and if they do, we certainly need to know about it. But what we can do is take a look at what some of the so-called experts are saying. Unfortunately, though, this is where things don't look so bullish. Some estimates suggest that gold could still rally from here. For instance, the Bank of America, along with Macquarie, Citibank, Commonwealth Bank, and the World Gold Council, predict that gold could hit $3,000 by 2025. This would mean that although gold still has a little more room to run, the window seems to be closing. Other estimates have previously predicted a lower price than what it's already hit, and this suggests that gold is already overvalued and could be due for a correction. For instance, UBS, along with ING Bank and Goldman Sachs, predicted that gold would reach $2,700, although Goldman has since adjusted its price target to $2,900. Meanwhile, Commerzbank predicted a $2,600 price target, and HSBC's estimates went as low as $2,350. Now, while we wouldn't like to give any sort of price targets, from our perspective, there is a chance that gold could rally a bit more from here, but it does seem to be increasingly unlikely. This is backed up by other so-called experts who have said that futures contracts are actually the primary reason for the recent rally, rather than demand for physical gold from investors or central banks. Others say that gold's recent price action could purely be the result of speculation, rather than anything fundamental. Now, this would be bad because it detaches gold's price from its intrinsic value, making it a more volatile and therefore risky investment. All things considered then, it looks like gold may have hit a local top, and this has led to many investors becoming increasingly concerned about a looming correction. As such, many are hesitant to allocate towards gold and are now looking at what other assets they can rotate into instead. This ties into whether the gains from gold could be rotated into silver or any other assets for that matter. To determine the likelihood of this, let's quickly explain something called the gold to silver ratio, or GSR. In a nutshell, investors looking to allocate to gold or silver can use the GSR to determine which one would be the better investment at the time by revealing which asset is undervalued and which asset is overvalued. To illustrate this with an example, let's imagine that the price of 1 troy ounce of gold is $1,000 and the price of 1 troy ounce of silver is $10. This would give you a gold to silver ratio of 100 to 1 because you could, in theory, swap your 1 ounce of gold for 100 ounces of silver. We say in theory because in practice you'd also have to pay a premium for buying physical metals. But for the purposes of this video, let's not overcomplicate things, eh? Now, a GSR of 100 to 1 would either signal that gold is very overvalued or that silver is dirt cheap. Alternatively, a lower GSR, say 20 to 1, would signal the opposite. Either gold isn't performing that well or silver is really expensive. At the time of shooting this video, the GSR is at around 85 to 1, which is above the historical average of around 60 to 1. This suggests that silver would be the better investment choice, which makes sense when you remember that gold has already hit a new high. It also makes sense when you see that silver has yet to experience similar price action to gold. Unlike gold, silver has yet to reclaim its previous all-time high, set back in 2011. Anyway, for those of you who are familiar with how crypto investors rotate out of BTC when it hits new all-time highs, you'll know that the first altcoin they typically rotate into is ETH, the second largest crypto by market cap. Well, it's a similar story with gold. Investors will typically rotate out of gold when it hits new highs and into silver. Silver also shares certain traits of crypto altcoins, such as volatility. With silver, it's not uncommon for the price to suddenly spike up, and it can fall down just as quickly. This presents investors with additional risk, but the silver lining, pun very much intended, is that this also means potential rewards. As such, if the gold rally does begin to slow down soon, there's a good chance that a lot of the gains made along the way could make it into silver. The thing is, though, it's not just silver that gold investors could rotate into, and this brings us to everyone's favourite question: what could this mean for the crypto market? Well, believe it or not, but we reckon that gold investors could be more likely to rotate into BTC than into silver. But why is this? Well, in short, it's because some investors might figure that rotating from physical gold into digital gold makes more sense than rotating into silver. As good as the gold to silver ratio is, silver price forecasts aren't all that impressive overall. Estimates from the likes of Investing Cube, Long Forecast, and Investing Haven put silver's 2025 price in the ballpark of around $35 to $50 per ounce. At the time of shooting, silver's price is already floating around $32. Sure, this means that silver could start a rally that takes it higher by around 50%, but realistically, this is unlikely to happen. After all, silver's previous all-time high was way back in 2011, so there's no real way to say with confidence that silver will rally much more than it already has. Not financial advice, of course. Meanwhile, BTC is the best performing asset of all time, despite it still being a teenager. In case you didn't know, Bitcoin's white paper recently celebrated its 16th birthday, and in that short period of time, BTC has rallied by well over 10 million%. What's more is that BTC's new all-time high means there's very little in the way of price resistance. In theory, this means it has almost limitless upside potential. BTC will rally for as long as people are feeling bullish on it. It's also worth noting that gold and silver investors tend to be long-term holders by nature, given how long it can take for the market to play out. This means that hodling crypto will be a breeze for them, and the rewards on offer will be much more attractive. On top of this, investors who normally buy gold for more than just speculation will likely feel comfortable with BTC's ability as a store of value, or, more accurately, as a hedge against currency devaluation via inflation. This is especially true as BTC prepares to see much clearer regulation, which will give it far more legitimacy in the eyes of more traditional investors. The best part, though, is that once these traditional investors are involved in crypto, they may opt to get exposure to gold via crypto rails. That's because they'll have access to gold-backed stablecoins such as Paxos's PaxG or Tether's XAUT. In the eyes of these investors, these will serve more of a digital gold use case than even Bitcoin. They're literally tokenized versions of gold itself. And when gold's price reaches new highs, it will be much easier for these investors to simply convert those tokens into other cryptos, such as BTC. Not to mention that they'll be able to store it all on a discounted hardware wallet from the Coin Bureau deals page, which they'll be able to find using the link down below. And that is all for today's video, folks. So if you enjoyed it, let us know by smashing that like button. If you want to see more content like this, subscribe to the channel and ping that notification bell. Be sure to check out the links in the description for everything we have to offer. There you'll find our deals page with impressive sign-up bonuses and trading fee discounts that will help you in your journey to the moon. You'll also find links to the Coin Bureau Club, our merch store, our other YouTube channels, and so much more besides. Okay, thank you all so much for watching, and I'll see you next time. This is Guy, signing off.